man, it's a huge day for Bitcoin. Bitcoin is in the middle of a critical pattern which could send us back to those lows. We've got a critical jobs meeting coming up today, jobs figure, non-farm payroll figures, which could give us a clue about Jerome Powell's future ideas around raising interest rates. I'm going to tell you why I'm all in and what price points I'm looking at, because this is getting really interesting now, and I'm really putting my chips into play right now. It's putting my money where my mouth is, because I really think we are getting overstretched now in this market. We are getting to max pain, max FUD right now, and I need to be making sure I'm in this market. So I'm going to be letting you guys know what I'm doing in terms of my long-term portfolio. But first, let's get straight into the chart. Don't forget to smash the like button. Don't forget to subscribe. As always, if you want to trade any of these moves with me, if you want to top up some of your crypto positions, you can do so using BYBIT or BitGet. Links in the description. Some amazing affiliate link bonuses there for you guys, which supports the channel, but also you're getting bonuses which you wouldn't get if you went directly to those exchanges. Let's get straight into those charts. You can see here Bitcoin is in this continuation pattern. This is a bear pennant or bear flag, symmetrical triangle, whatever you want to call it, but we are looking for this move to continue to the downside. That is the most likely occurrence, and the majority of the time these patterns do break to the downside. Now that doesn't mean you can't break to the upside, but I do want to show you what is the price target. If you take this as a bear pennant, which is the more powerful target, this brings you down to that 17,500 range, which is quite scary, I know, but that is taking the impulse wave, the measured move from the previous fall down here. Now, if you want to take a little bit more conservative price target, you want to take the measured move from here to about here, and that will get you back down below the range, back into that 19,000 range. Now, remember, I know I mentioned there's some support coming in at around 19,200 levels, so that ties in quite nicely with this pivot point here. This pivot point here from the previous larger pattern brings you to that 19,200 range. That is what I'm looking for. If we start falling to those levels, I will be loading up some more, and I will be adding more aggressively. If we fall below 18,700, those purchases, those nibbles will be getting even larger. If we do get to those lows of 17,600, the previous lows, I will be going all in. Now, I may be wrong. We may fall lower than 17,600. I want to make that very clear. But I also think that if we do see crazy low targets, history has shown that Bitcoin wants to dip, and it dips very quickly. You don't get a lot of time in these capitulation candles. Sometimes it's just an hourly candle, sometimes a 4-hourly candle, and a lot of people will be panicking, trying to get their money exchanges, trying to get their stuff ready to buy cheap Bitcoin. So if you guys are waiting for some of these opportunities, you've got to be prepared. You can't just hope when Bitcoin flashes down to 17,500 that you're then frantically trying to get money on exchanges. That doesn't work. You've got to be ahead of the game. You've got to get your cash ready. You've got to be in a couple of stable coins ready to buy that dip if you want to buy that dip with your limit orders set. When you get to these historical lows, it can wick down quite quickly. Now, if I bring out the EMA ribbon, look at this. On the 4-hourly EMA, we are running into a resistance again, which ties in with the top of our symmetrical triangle here. So I'm expecting some resistance to come here. And also, we know that the jobs figure is coming out in just a few hours from now. So we need to watch out for the jobs figure. When that comes out, the market is going to be looking forward to that. I'm going to let you know what to expect of that very, very shortly here. Let me just finish off in the charts. I'm expecting an impulse move to the downside. Now, don't be surprised if you get an intraday rally here in the day as well. Sometimes you get a rally because going into meetings like this, people want to be less short. So when you're in a binary event like a jobs meeting, traders want to not be too heavily short going into those readings because they can't predict the outcome. If it's a really positive jobs figure, you can get a rally and break to the upside, right? We can't rule out the upside. If we get a really positive jobs figure, which is that, you know, the jobs market is starting to show some improvement, and we're starting to see that inflation is starting to take an effect and average wages are coming down, then we could start seeing a move to the top of the wedge, right? Maybe we can start rallying to the top here at about 21,000, start working our way up. So we've got to take that into account. So don't be surprised if you get an intraday rally, but the key is going to be what happens after the job figure, which we're looking out for. No doubt I'll give you guys an update once we hear what those figures are. If I bring out the VPVR here on the 4-hourly chart as well, you can see we're at a critical level here. We're right at the point to control that red line. So once, either way, if we start falling to the downside, you do start getting into thin space here, okay? This becomes some thinly traded space, which means it's easier for the bears to start pushing you down to some of these lower levels. So please do be cognizant of that. If I bring out the Bollinger Band as well, which is also very useful to look at, you can see here on the 4-hourly, we are now in the middle of that Bollinger Band. Normally when you get to the middle of the Bollinger Band, it can sometimes act like resistance and be the reason for you to push to the downside. So we want to watch out for that on the Bollinger Band as well. Switching things up to the daily time frame here on Bitcoin. And you can see here on the Bollinger Band, we are coming towards back into that middle range, okay? So we do want to watch that out. But more importantly, let's bring out our EMA ribbon on the daily chart here. And what you'll notice here on the EMA ribbon is we've not even managed to get towards our daily EMA ribbon, right? So you can see this in terms of a consolidation. We had a consolidation going towards our EMA ribbon, pushed back to the downside, consolidated a little bit, not even got close. So I just want to remind everybody that the bears are in really strong control right now, and we need to be preparing ourselves for more downside. Yes, you can have relief rallies. Yes, there could be a move up towards 21,000 on some really good news, but even then, you're nowhere near flipping your daily EMA ribbon bullish. So let's keep things into perspective. As you can see, it's a critical moment here in the charts for Bitcoin. We have to be very, very wary of lower price points to the downside. And that is what I'm mentally preparing for now. I want to make sure any positions I'm in, I'm happy with. And also, if we do get those capitulation candles to the downside, if we do get those instant moves to those crazy levels below 18,000 again, I want to make sure I'm not that person that sat there with regrets like, oh, I didn't have my funds ready, I wasn't mentally prepared for it, and I didn't buy the dip, right? I want to make sure that I act with my conviction. If I have conviction, my money's got to go where I'm saying. So I'm getting ready that if we do fall to those levels, I'm going to have my limit orders in place, I'm going to have my cash mobilized on the exchanges, that I can take advantage of it, because history does show when you do capitulate to those levels, it happens very quickly and you can miss out on those very, very quickly. I remember from summer of 2021, when you wick down to that 29,000 level, it falls very, very quickly. I mean, people are like, oh, it was so easy to buy 29. It wasn't. You get to that 29, then it recovers back to 40 quite quickly, and then your FOMO isn't as exciting, right? It's not as exciting to buy 40 when you've just seen something at 29. So if you do want some of those cheap prices, if you've been following crypto on a daily basis, you want to take advantage of those crazy prices, right? Otherwise, what's the point of following this content on a day-to-day basis? You want to take advantage of that. So get your limit orders set if you have conviction. Make sure you've got your cash mobilized on the exchanges as well. That's super important. And then you can take advantage of that. In terms of jobs figure, really, really important. Jerome Powell will be looking at this jobs figure to guide his decision-making for the next FOMC meeting. Will he be aggressive with these rate hikes? Will he be quite soft? These are all the clues we're going to get from this jobs figure. So it's not just about how many jobs are created. It's also about looking at the average hourly wages as well, okay? Are the wages going up? Are we seeing more inflation? Or are they starting to come back to more realistic levels, which could give us a precursor that CPI is starting to cool down? Remember, the private ADP figures, which we covered a couple of days ago, showed that inflation in wages was 7.6%. So wages were continuing to go up. So we need to be wary of that and keep an eye on that as well. Hope you guys are staying safe out there. Don't forget to smash the like button and subscribe. If you haven't watched my video from yesterday, make sure you go do that. I'm going to link that up for you guys to go watch here so you're fully in tune with what's going on Cardano and Phantom with the latest updates there. I will be back with another update once we've got our non-farm payroll. Stay tight out there, guys. Enjoy the trading day. Enjoy your Friday. And I'll see you in the next